Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Bitcoin miners are facing an existential squeeze as the cost of production drastically outpaces revenue. Bitcoin is currently trading near $60,000, yet Galaxy Research and CoinShares data reveal that the average cost to mine a single coin has surged to $84,300. This hash price collapse below break-even levels is forcing a painful consolidation in the sector. Miners are now splitting strategies, with some halting operations entirely while others pivot to holding their BTC reserves rather than selling into the market. The margin compression is real, and it signals a potential supply shock if smaller players fail to survive the winter. Meanwhile, institutional capital is rotating aggressively into the technology sector. Bridgewater Associates, the world's largest hedge fund, has executed a significant portfolio shift in the first quarter. They divested $61.85 million in financial stocks, effectively exiting the traditional banking sector. In a bold countermove, Bridgewater rotated that capital into $145.22 million of semiconductor and AI infrastructure plays. This massive bet underscores the belief that artificial intelligence remains the primary driver of long-term value, even as macroeconomic headwinds pressure financial institutions. On the macro front, data integrity issues are clouding the economic outlook. A corrupted PDF file containing critical economic data was recently released, with analysis showing 6% of the document structure containing critical errors. While the specific indicators remain obscured, the technical failure highlights growing concerns about the reliability of real-time economic reporting. Investors are left navigating uncertainty without clear guidance on inflation or employment trends. In related news, foreign institutional investors have executed a sharp U-turn in the Indian market. FIIs quietly reversed their stance on 6 specific Indian equities, triggering multi-bagger rallies. The pattern is particularly visible in Bajaj Consumer Care, where sudden inflows have defied broader emerging market weakness. This selective buying suggests that global capital is finding pockets of resilience in Asian consumer discretionary stocks, despite the global risk-off sentiment. However, household balance sheets are under severe strain. A new analysis highlights a disturbing trend: the growing reliance on Social Security benefits to service high-interest credit card debt. As inflation erodes purchasing power, retirees and low-income households are increasingly using fixed income streams to cover revolving credit balances. This dynamic creates a fragile feedback loop where debt servicing costs consume essential retirement funds, leaving little room for error in an already tight credit environment. Looking ahead to today's release, there are no major high-impact economic calendar events scheduled within the next 36 hours. The absence of key data points like CPI, PPI, or Fed speeches means markets will likely trade on technical levels and the narrative flows we discussed today. Without fresh macro catalysts, volatility may remain subdued until the next data dump. That's your market briefing. Follow Rumour with AI for daily market intelligence.